In this video, we're going to create a model for hypothetical stock market investment. We're going to look at a couple of different strategies and compare them. So I've heard this strategy that if you had somebody that invested in the market constantly every month over a certain period of time, they're likely to be doing much better compared to somebody who's just getting right in at a particular time, or they're trying to time the market and get in on a particular time. So we'll try to build a model and kind of test to see what are different results depending on different time ranges and different entry points. So we're going to start with that model of constantly investing in the market, no matter it's down or up. And we'll start maybe with some monthly strategy, but the idea is going to be that we're going to enter some variables and we'll be able to change those and play around with those to see what would happen in different cases. So first of all, let's just start by entering some assumptions on this. I'm just going to name this assumptions for this tab. So we'll have a start date for this. So we can modify that to end date. So for now, I'll start with 10-year periods. So I'll enter like today and 10 years ago, and we'll compare the two. So we're going to be able to change these dates later on to see what would have happened with different start and end dates. Like I said, for now, I'm going to go every month. So I'll just go 30 days. And we can change this to like 7 days, 14 days, whatever. And we'll do the actual ticker for now here. And we could pick a particular stock, but I'm going to do S&P 500. So now using this, let's try to create some sort of table where we're going to show our dates of investments. Like for example, if we start on 7/10, then every 30 days, we basically want to do another investment. So I'm going to put that right next to it for now. We'll probably move it to a different tab at a later point. And what I'm going to do here, I'm just going to first calculate how many days difference I got between this and this. That's how many days we have. And then we're going to divide that by this 30 days. And with this, we're going to be able to make 121 investments. So I'm just going to round it down to 121. So we'll use int function. So this is going to be the number of investments we're going to be able to do. So now using this, we can use something like sequence function. And we're going to be doing 121 investments, which will be this right here, comma. The number of columns for this is going to be 1. The start, for me, I'm going to start from 0, and then I'll explain you why in just a second, comma. And then as a step, I'm going to use this 30 again. Like this, hit enter. So you can see we got 0, 30, 60, 90, 120, 150, and this should happen 120 times. Right there. So 121 rows because, well, it's actually 121 times. That's accurate. So now I want to convert these to actual dates of investments. So if I take this start date and add 0, I'll get the same date. If I add 30, I'll get 30 days after this, and so on, right? So what I need to do, I need to get all of this and add the start date to it. And because this is going to be an array calculation, we'll do Control-Shift-Enter or Command-Shift-Enter to get this array brackets, hit enter, and we should get our dates. So we got 7/10, the next one would be 8/9 with this 30-day period, then 9/8, then 10/8, and so on. And if we decided to change this 30 to say 7, this whole thing should automatically recalculate. See, now it's going to be 521 periods. right here, and we have all of the dates. I'm going to switch this back to 30. So maybe let's move this over here. Number of investments, that should be good enough. Since this is a calculation, I'll just color it a little differently. Okay, so now that we got this, that gives us our investment dates. Now we need to figure out how much was this ticker price on that particular day, because we're going to be buying that particular stock on all of these different dates. So to do that, we're going to use Google Finance, and we're going to take this ticker. Well, that's not the ticker, this is the ticker, comma. We're going to use the attribute being close, and we'll get the start date, which will be basically this. And we're not going to do an end date on this. So if I close this, hit enter, see it gives us that on that day, this is how much it was. So as you can see, now we got the price, but I don't want to have this entire like date close, this date and the price. I simply just want to have this price right here. To do so, I'm just gonna add index function on this, and I'm gonna say, give me the item in the second row and second column from that 4-cell grid, which would point to this. And that should give us just this, just the price. Now, to drag this down for all these other days, I'm gonna have to lock this reference over here, which will be B4. So I'm gonna select this and do F4, like so. And then we're gonna drag this down. I'm gonna double click in a corner, and we should be getting all these numbers. So as you can see, we're getting all of this, and once in a while we get an NA here. I'm going to assume that this is a day where the market was closed, and that's the reason why we get an NA on this. So we're gonna have to figure out how we're gonna get the nearest day to this and get the accurate price. So let's just try to erase some of this for a second. So what if we go back on this and try to do, after this start date, do a comma and do some sort of number of days? And let's just do 2 for now. So we got a number. It's interesting. Let's actually remove this index for a second so we can understand what exactly is going on here. Okay, so that gives us this. What if I change this to 1 day? Do we get nothing? Yeah, so we get nothing. If I change it to 2, I get that particular price. Now, what if we do the same thing on a different day here that was actually open? Then it's going to give us 2 days like this. So we could do this and then grab the first one basically here on top that's available. So maybe we could do like 3 days just to be safe. Think that should be enough. And that's exactly what I'm going to do. So I'm going to erase this, clear all of this, and go back all the way to the top. We'll adjust this formula. Let me clear this first. So we'll adjust this formula, and we'll simply just do a comma, and as a number of days, we'll do 3. And I'm going to do double click in the corner. Let's see if we still have any NAs. Well, looks like we're good. So there we go. So we basically got the price on that day or the closest one we can find after that day. Let's actually mark it as currency. So let's add another cell here, our investment value. And that will be the total amount we'll be investing over this time. So I'm just going to do a nice round number so it's easier to see what's going on. And again, the idea here is that we're going to be able to change all of this stuff if we need to do so. cut some decimal points like this. So basically, right now, what I'm going to have to do is divide this $100,000 between this number of investments. So like in this case, if I do equals, take this and divide it by this, that would be this much, 826. And that's the amount we're going to invest in each period. Now, the problem we're going to have is that to buy one of these, it's more expensive than this amount. So we would have to probably choose some different index fund similar performing to this, which doesn't cost as much as this. But I'm not going to care about it because I'm just trying to look. If we put it in a market, we can definitely switch this to another Vanguard or some other stock that's not as expensive, but it's still keeping track of S&P 500. So all I'm going to do, I'm going to just say, okay, so if we're investing this much per period, I'm going to do Control X, Command X, Control V to move this thing here, this formula that calculates this. And at this point, if I wanted to know how many shares I would be able to buy at this price, I would have to basically just do a division. And I'm going to have to take this number and I'm going to have to divide it by this over here. I'm going to reject this. So to be able to drag this down, we're going to have to make sure this is absolute reference. This B7 value, I'm going to highlight and do F4. And that would be this number. Let's just format it to numbers so it's not looking that crazy. 0.6 shares we can buy. Good enough. I'm going to drag this down. Now, what I'm going to do here, I'm going to just do a couple of if statements here. So I'm going to add an if statement here. And I'm going to say if this cell, the date, equals blank, then leave it blank, comma, otherwise we want to do this formula. So I'm going to make that change in this formula. And I'm going to do a similar change here. So again, I'm going to say if this date equals blank, then leave it blank. Otherwise, we're going to do this formula. And we're going to drag these things down. And I'm going to go all the way. I'm going to do Command Shift down a couple of times. And then Command D or Control D to basically go all the 1,000 lines down on that formula. And the same here. So on this entire range. If you think you're going to have more than 1,000 periods, then you want to continue this and go further. That's that. So at this point, let's just move all of this to a separate tab. And I'm going to call this Steady Investor. And I'll simply just grab these formulas I did. Command X or Control X. Command V or Control V. And we'll move all of that here. We'll just label this stuff. Maybe make it bold. So at this point, if we just sum all of the shares. So I'm going to do sum. And we'll do this. Drop the end reference to go all the way down. Close parentheses. Hit enter. That should be total shares we bought over that period of time, 42.51 shares. So at this point, if we want to know how much this is worth, we need to check what it's worth as of our end date right here. So let's get the price of this at this date. So I'm just going to enter price again, and I'm going to do our Google Finance formula again. We're going to use the ticker from the other tab, being this, F4 for good practice, comma. The attribute for this is going to be close again. We're going to use a start date being the end date, really, this one. Again, F4 for good practice, comma. And then number of days, I'll do 3 again, like I did before. I'm gonna hit enter, and we're gonna pick this first available one. So I'm gonna use that index function again. Out of that grid, we're gonna do comma 2, close parentheses, hit enter. There we are, we got our number. So if we wanna know how much all of this is worth today, we're gonna take this and multiply it by that, and that will be this. So with this strategy, over 10 years, if we started on this date and on this date and invest every 30 days, if we're investing $100,000, we would end up with $163,000, 835 cents over that period. So let's just see what percentage that is. And what we're going to do, we're going to take our total divided by our initial amount. I'll do F4 for good practice, and that will give us 163%. And we're going to do -1, which is going to be that 63%. So I'm going to do percentage. You can call this whatever makes sense to you. So basically, long story short, the value of investment went up 63% with this strategy. Now, if we go back and change our numbers, the whole thing should automatically update. So if we go back to assumptions and say, let's start not 10 years ago, but 5 years ago. And over that 5 years, we're going to, again, invest the same amount of money. Again, the same 30-day. So all the other variables being the same, we're going to end up with this. And this is how much it would have gained. And again, you can, at this point, change these numbers to whatever you want them to be. And that should adjust accordingly and give you your numbers, just like that. You could have those totals here. If you wanted to, I can Control X or Command X, all this from here and put it here, if you want to be able to see them as you're changing these numbers. As a matter of fact, right now, I'm probably going to do that. So now I can basically play around with all of these numbers, like I said, including this. So if I invest the same amount of money, so let's go back to the 10-year period. So we're investing, in this case, that $100,000 over that 10 years, and we're doing our investments every 30 days. What if we do, say, every 2 weeks? So we change this to 14. So that would be our number. You should be able to see that now this automatically updates everything. So if I go back to our table, you'll see how we got a lot more investments here, which is now going by every 2 weeks. And we're able to, again, keep track of all of this. And again, if you want to do weekly, you do 7 days. And that should update accordingly. So I'll just go back to 30 days. That's fine for me. So I'm just going to put this back, Control X, Command X, right here on this tab. And that should be this one. Now let's do another one where we're going to be able to just pinpoint particular days and just invest on those particular days. So I'm going to add this, and I'm going to call it knows everything. And for this, what I'm going to do, I'm just going to basically copy a little bit of this. Paste it here. I'm going to delete this formula because we're not going to use a formula for that. And for this, we're basically just going to pick our own dates here. So let's just create an SP500 chart for ourselves. And the way I'm going to do that, I'll just use Google Finance. I'll go back to assumptions. We'll click on this, comma, as our attribute, we're going to do close, comma, start date, I'm going to use this, comma, end date, I'm going to use this, start date here, end date here, and daily, I guess. And that should pull us all this data starting from July 10th and ending here. All right, so using this, now we should be able to do a quick graph. So I'm going to highlight that, do a chart. And that should show us this performance over time, as you can see. So we can now pick like the best times we could imagine we could possibly put some money in here and basically split in a few different investments. So for example, we can just put this downtime right here, February 11th, 2016. So I'm going to enter that. And since I had my formulas here, it will go pick the price on that. We're going to have to adjust this formula in a second. But before that, let me actually go here and choose this other downtime right here, which is 12/24/2018. And then finally, let's go back and pick this one down here. That's 3/23/2020. And we're basically just going to split our investment between this many points. So we'll just say total investments. Make this bold. And what we'll do, we'll basically just count how many investments we got here. So I'm going to use counter and do this. Get the range all the way down. 3 investments. If we keep adding more, it will recalculate to that many. And we need to get our total per investment. And what we'll do, we'll take our total amount from assumptions, this one, and we'll divide it by this number of investments. And then we'll basically just use that number and divide it by the price. So that's our $33,000 per investment. And I'm going to do Control Shift down a couple of times and Control D. Was not expecting this. Let's just go back and see. I should have locked this F2 in place. All right, that's more like it. And then this one we can just drag down as it was. We don't have to change it. So Control D again. And that should be our total number of shares. So at this point, we can basically do this stuff. Let me just copy that. Paste it here. So this will be the sum of these. So I'm going to take that and get the sum of our shares. There it is. So this is going to stay the same because it's still the same end date. And then this is going to be our total shares times price, which is accurate. And this is our percent change, as you can see, which is this versus our initial amount. So if we knew exactly where are the low points every single time, this is how much it would have been as opposed to this. So let's rename this one. I'll just call it temp chart because we don't really have anything dynamic here. This is just so we can see what's going on. So we can enter some of these dates. So now I guess let's make the exact opposite. This is the one that knew everything. exactly where the lowest point is, which is pretty much impossible. Now let's make a copy of this and say knows nothing. And for this, basically, instead of picking the best possible scenarios here, the lowest points, we're going to actually choose the highest points. So we're going to grab like this date over here, 7/13/2015. Then I'm going to go back here. Let's pick another high point here, like right here someplace. That's 2/2/2018. And let's go back and pick another one right here, which is 2/21/2020. And then I guess this would be the next one, which would be 1/12/2022. So that would make it 4 investments, as you can see here, that would divide our $100,000 to 4 $25,000 investments. And this would be our total shares with this. This would be current price. And we would end up with this value. So if we consider the worst case scenario, we ended up getting 30% gain over that same, what I believe was 10-year period. If we knew exactly the lowest point each time, this is how much it would have been. And then if we go with that steady investor strategy, this one, then it's basically this much. Now, since I did these two with this total investments and total per investments in this tab, I'm going to move those from here to this tab. Control X, Control V. And I'm going to add those 2 columns. Copy paste those, Command C, Command V. And for total investments right here, that would be this. Again, Control X, Control V. And our total per investment is this. So again, the reason I'm using cut and paste is because when I do this, it will adjust all the formulas in the right way. You never would want to do Command C, Command V for something like this. Clear all of that. And probably this should also go to the steady investor because that's the only one where we actually choose this. So again, I'm going to do Control X, put that here someplace. And all of these other ones are calculations really, so we should probably color code them in a different way compared to the rest. Command X. So using this, now you could take this and play around with other stocks too. So right now I went with this S&P 500, but maybe you want to do this with like Apple stock and see what would happen. And this should update and show you with Apple stock if you did those same investments on those same dates, what would have happened. So let's just finish this off by just adding a little bit of color coding for all of this. I'm going to add some background color, some font color. We'll do some borders. Nothing fancy on this. I'm going to take this paintbrush and color all of these headers that same way. That same applies here. I'm going to take this background color off because all of these are formulas. The only one that's not a formula is this one. So instead, we'll just color code the one that's not a formula. Some borders here, some borders here. And then I'll just apply the same styles. I'll grab all of that, paintbrush, go here, and apply it here. And then paintbrush, go here, apply it here. And then finally, these dates, is what is manually entered on these tabs. So I'm going to select all of those and do yellow. And that same thing I'm going to do here. So Control Shift down a couple of times until I get to the end. Color coded yellow. And there it is. So now we know, according to our hypothesis, what would have happened if we had invested this money by steadily doing it every month in this case, or by picking the worst times to enter the market or the best times to enter the market. And I'm just going to go back with this. Hopefully you've learned something. Thanks for watching. Please subscribe, and I'll see you in the next video.